Hey everyone, welcome in to another daily editorial here on the KE Report. I'm getting an update from Snowline Gold, and we're going to be talking about the company's initial resource at the Valley Gold deposit on the Rogue project that came in at over 7 million ounces, both indicated and inferred. Total is 7.31 million ounces. That encompasses just over 4 million ounces in the indicated category and over 3.25 million ounces in the inferred category. I'm chatting with Scott Berdahl, CEO of Snowline Gold. Snowline is traded on the TSX Venture Exchange under the symbol SGD and on the OTCQB under the symbol SNWGF. Now, Scott, first and foremost, congratulations on coming out in a relatively short period of time with the maiden resource at this Valley deposit of over, again, 7 million ounces in the indicated and inferred category. Let's first just recap all the work that has gone into this resource over, I believe, not much more than a 2-year period.
Yeah, well, thanks, Corey. No, it's been a quick run, and it's a great deposit, and really nice to be able to call it a deposit now for a lot of reasons. And one is just the consistency, and the consistency allows for understanding with and basically faster advancement of the project. It has benefits in the exploration stage and has benefits on the road as well. We launched the company in 2021, as you know, early in the year. We started drilling on a target on our Anderson project called Jupiter. And in the background, we were running a big soils grid over Valley. It was an interesting prospecting discovery. There was an outcrop, a couple of outcrops of this granodiorite, some good mineralization, a good chip sample found. And really, that was about it. And we'd seen some of the regional geophysics that was available and suggested, okay, these outcrops of the intrusion look like a bigger thing, could be about 1 kilometer or 2. So yeah, we did that soil sampling, and it showed a 900 by 150 meter soil anomaly over the target. And so that was great to see. And we did a drone mag survey, which really outlined, just bright as day, the extent of the intrusion. It has a strong contrast between the reduced intrusion, the magnetic low, and the altered rocks around it, which produce a mag high. So you had this kind of donut just marking where the intrusion was, and then that soil anomaly coming off the western part of the intrusion where we're seeing the really nice mineralization. So at the very end of 2021, we drilled 4 holes about 800 meters into the side of the system. It was a good spot in the geochem anomaly, and it was also where we had mineralized outcrop, but we were just in the hornfells for the most part. They kind of crossed in and out of the intrusion, or dikes at the edge of the intrusion, and we had some decent results from that. But it wasn't really until I guess 2 years ago now, but 2022, early in the summer, that we fired the drill back up again and really started taking some big step outs. And when we did our hole 7, that was a 350 meter step out along strike from those first holes. And yeah, that was when it was like, okay, this is something pretty special. And we spent a lot of 2022 just all over that broader intrusion. And a lot of it is not well mineralized, but certainly a substantial chunk of it is. So yeah, we spent a lot of the 2022 system, like a lot of the meters that are reported as going into this resource are actually off kind of in the boonies and really not forming part of the actual inventory because they're so far outside of the pit and on lower grade parts of the intrusion. And so it wasn't until the end of 2022 that we really doubled back and said, okay, well, we have a substantial area of mineralization here. Let's poke some more holes into it. And last summer, it was really about building that out and starting to establish a grid over it. And when all the dust settled with assays in and everything else, I think we had our last results out in January. From last year's drilling, it was clear that we had something pretty special, and it held together well enough that we're not even talking about just an inferred resource, but a large fraction of that already indicated. So yeah, we moved ahead with the resource, and it really took just the snow melting and getting started up out there again to get QPs on site and to verify their work. And then yeah, we were ready to kind of flip over our cards and show what we have as an initial resource estimate out there, just as a starting point, really.
Yeah, here we are. It's something you and I chatted about a lot kind of last year and even early this year, was the consistency of the drill results and the area that you were drilling in. Some other point that we should make here is that this whole resource, it's simply within one pit. There's a number of figures and long sections in that news release that show different pit shells as you eventually grow if you were to move into that mining scenario. But talk to us again about the importance of this being simply one deposit, one pit.
Yeah, I mean, that simplifies a lot of things. You know, from an operational point of view, it makes it easy. You're not dealing with multiple sites. You're not dealing with multiple site-specific issues. You're not dealing necessarily with multiple metallurgy factors for different areas. It's just consistent mineralization. So, that really helps. And I think it's worthwhile, even within that pit. That's an advantage in itself. But within that pit, a lot of the current resource is very close to surface and in basically this big high-grade bleb or yoke or whatever you want to call it that starts in a almost pit shape, right, again, from bedrock surface. So that has a further advantage. We really wanted to highlight that we were looking for ways to do that without creating the impression that we were trying to signal towards this as the, what will actually be a reserve down the line. And this is where we're at now. That's not at all the case. This is the entire pit is very compelling. And we've taken conservative approaches to get to the numbers that we're at now, but we wanted to highlight it. And so we ultimately broke that pit into 4 phases. You can see in figure 4 in the release and as well as table 3, the resource is broken out into 4 sequential shells, pit shells. And then you can read out how much, what the tonnages of the various categories and the waste rock are in those shells, and how they all cumulatively add to the resource. And so the reason that's significant, though, is that shell 1 in particular, and it's basically all mineralized. And, that has huge implications for payback, for the optionality and the robustness of the system when you're starting things up out there. So this is really an ideal scenario for building a mine. And yeah, again, those 4 shells are all part of the same pit. So just to reiterate that, it's not like these are different resources from different areas. It's just sequential. You mine the first one, then you mine the second and third and fourth and so on. And this is just where we're at. We're still seeing data constraints, open edges of the system. So there's a lot of room to explore from here.
One other aspect that I want to ask you about deals with this revenue factor, 0.72. I know some people have been asking questions on what this means, what revenue factor do other companies use, how do we compare it? Please explain to us the revenue factor used here, that 0.72.
Yeah, that's something that I think that more people should pay attention to when they look at resources, constrained resources. The revenue factor 0.72, the revenue factor is basically a measure of using the preliminary resource level economic assumptions that you need to make. And we've listed out, we've been fairly conservative with our assumptions in coming up with this resource, but you do need to make some economic assumptions to figure out what your cutoff grades are going to be, to figure out what's going to be profitable, what's not, or at least what may be profitable, what likely won't be. And as you grow a pit on a given ore body, at some point your costs are going to exceed your gain from mining more material. And especially as you push out into lower grade zones and beyond. And so when the incremental cost over the incremental gain, again, this is very preliminary. We're not at the stage where we're running very detailed economics, but it's something that every project goes through at this stage. When that equals 1, then obviously you don't want to push the pit any further because you're now spending more money to move the rock than you are getting from it by selling the product. But commonly, the standard practice is to go to revenue factor 1, and that's your resource. But ultimately, you might be mining for a long time where your incremental gains are trivial, and you're basically just adding a lot of rock that is not highly valuable to your system. And so and on top of that, you might be incurring those costs well before your payback, especially if you're heap leaching. You might be looking at a 6-month to a year lag or that kind of a thing. And so it's not necessarily 1-to-1. You're actually discounting your profits more than you're discounting your costs going into it. But anyway, getting into the weeds a little bit there, the main point is that a 0.72 shell, it's not normal to not just push things out to 1, but we did that in part to highlight what we see as the best and most robust picture at this point. And it's a really conservative approach to looking at the system. We really aren't stretching things and getting to the numbers that we're getting to. We're starting from a solid place to build from. So that's why we've highlighted that revenue factor wherever we can in the release, just to get that point across that this is a robust kind of mid-stage thing. And it's often when you go to reserves from resources that you end up going down into a lower revenue factor, because that's when you've actually done the robust modeling. Of course, we're nowhere near that. We still have a lot of economic studies to do and so on, but at least this is a starting point to show what that could look like.
All right, thanks for addressing that, Scott. Let's now talk about growth. Where does growth come from in terms of resource? We can see in a number of those figures that this resource is open at depth. So do you continue to drill deeper here? Do you have the opportunity to go along strike?
I think that there's still a lot of places to explore here. Basically, the overall shape of the mineralization seems to be forming kind of a cupola around potentially a different phase of the intrusion that we've shown before in previous releases, a finer grained zone. And you basically see it dipping off in various directions, basically both along strike and which you can see in figure 4, the long section. But you also see it going down on both sides on the cross sections as well, figures 1 to 3. And so that northeastern and northern boundaries, as I've mentioned before, are pretty compelling. They have broad zones of open mineralization, and we'll be looking at those. And the way that the system continues to the southeast along strike is also very interesting. And we're kind of preferential to the north and northwest and southeast, just because they don't seem to be dipping off quite as fast and can potentially push the pit easier in those directions. But yeah, there are a lot of areas to explore, and we'll be basically stepping out and testing a lot of those this season.
So Scott, what about some of the other regional targets? At the bottom of the news release, figure 6 goes around the Rogue project, showing all these other targets that you have. Even down to the south in the Cynthia project, do you prioritize regional exploration, or do you still focus at Valley?
We are prioritizing Valley, but we're still wanting to hit the regional picture quite aggressively, and we are. So we're looking at a 5 drill program this year. We already have 3 turning, and we're bringing in the next 2 in the very near future. And those 2 will be hitting regional targets. So, overall, if you factor in efficiencies and the head start of Valley, we're probably looking at about a 75-25 split in terms of total meters drilled, but we'll see how the season shakes out. In any case, we're planning on about 10,000 meters or more of regional drilling. We'd like to get back in the fairly near term to Cujo and get for the first time, to our Aurelius target. Both of those are on the docket for really the next few weeks, as soon as we can get the drills turning. So late June, early July. And then, yeah, we're keen to get back to Gracie and Reed. Those are 2 targets just to the east of Valley that we've done a bit of drilling into before. And, it is one where we've been chasing a buried intrusion. We're 9 holes into that chase, and there's still a lot of ground left to test. And it's one where, we don't want to blow our brains out on it, but at the same time, it certainly wouldn't be the first ore body found where we'd find one on drill hole 10 or higher. And that's really more of the norm than the exceptions. So yeah, there's a lot to explore. And then on the other targets too, a lot of them have us pretty excited, and there's just more surface work to do before we commit to saying, yeah, we're going to put a drill on there. But a lot of them are shaping up to look that way. And so yeah, there's a lot going on regionally. We have regional crews out as Monday morning, the 17th, going out and building. Actually, we've had a few people on Aurelius already, just getting that target ready for how we might drill it. And yeah, so it's going to be a busy season regionally as well. And then of course, that Jupiter target, the first thing that we drilled into back in 2021, we've finally consolidated ownership of that. So Snowline has 100% ownership of Jupiter. And that's really been the reason that we haven't put a drill back on there, because we did have great success in that first season, and we almost didn't get the drill down to Valley in late 2021, just because we were having such a good time drilling into that brand new orogenic system at Jupiter. So we're keen to get a drill back there, and we'll be going ahead with that too.
Okay, so a lot of drilling this year. What about other work focused at the Valley deposit outside of simply growing the resource? Do you go about upgrading into more of the indicated category? Do you even upgrade further than that? Or is there other work that you could do, potentially even moving this towards some sort of economic study?
Yes to both, I guess. We want to upgrade more and get a better understanding, particularly of that high grade zone. And you can see the continuity in that shell 1, for example, and what that zone means for the overall potential of a project. It doesn't take much to de-risk that. Like, we're looking at basically 42 million tons of rock there, and with a high degree of consistency. So yeah, it doesn't take too much to de-risk that even further. And then yeah, to convert a lot of inferred to indicated. That's certainly something we would like to do this season, because then when you do get down the road further into economic studies, you have more material that could potentially be converted into reserves. And those two, the expansion and the upgrading, aren't necessarily mutually exclusive. We have holes that are drilled to test both the infill when you're up, and then go out on an open edge of the system and chase the mineralization in that direction. So, hopefully we can efficiently pursue both goals this season. And then, yeah, in terms of other things that can be done, I think that even with what we have right now, bird in hand, with this fairly conservative initial resource, I think that, yeah, it's obviously something pretty special. And so even if we weren't to find a single other ounce of gold at Valley or anywhere else in our tenure across the Yukon, we'd still be in a pretty good spot to drive value and move this thing forward, or move this thing forward. And at some point that will become a primary value driver anyway. Is just if we can keep growing it, and we're fortunate enough to be adding mineralization that would be mined decades away, then at some point the delta of what that actually means to today's value for the system is going to start to drop off in comparison to the value of just reducing your permitting timeline or reducing your engineering timeline or construction timeline by a given interval, whether it's a year or a month or whatever it is. And so yeah, that's very top of mind. That the other value driver here now with the Berdahl Valley is getting to that point where we're ready to take our shiny new gold bars to the market and put them up for sale. The sooner we can do that, the more valuable Valley is. And so yeah, that's ironing out our baseline work to ensure that we're covering all factors here, jumping into various levels of scoping and engineering study, and really mapping out that process to efficiently move Valley ahead.
All right, Scott, thank you very much for walking us through this resource estimate, the initial resource estimate at Valley. I'll post a link to the company's website and the news release so everyone can read over the news release and look at all those figures from within that release. Please keep on emailing me your questions, everyone, as I will follow up with Scott to address any more questions you have on this resource, and also look ahead to the drilling that is planned this year and any of those results. So Scott, again, thank you very much for this update. I'll chat with you again soon.
Awesome. Thanks, Corey.